Welcome everyone to the Firing the Man podcast. On today's episode, Ken and I discuss the top 5 articles in the e-commerce news for Q1 2021. What's going on, Ken?
David, what's up? Happy to be in the podcast studio today, taping another show, and talking about the top news in e-commerce in Q1. It's 2021. That's kind of crazy.
It is. And, at the time that we're recording this, 2020 is in the rearview mirror, and what a crazy year that was. And I think a lot of trends, and as we'll discuss today, a lot of the trends that were set in 2020 are going to carry on to 2021. So let's jump right into it.
So, David, last week, you and I were on a phone call with a vendor. I'm not going to mention who it was, and they were explaining a few things, and they had mentioned this marketplace. They had mentioned, hey, we have some clients that are crushing it on Target, and we were on a Zoom call, so because I could see your face, and I'm sure you could see mine, and as entrepreneurs, I don't know about you, I want to hear your answer. My wheels were spinning as soon as he said that. Like, oh, I've never checked out Target. I want this shiny object. What did you when you heard that people were crushing on Target? What'd you do?
Absolutely, yeah. It immediately piqued my interest, and I'll tell you the reason why is as a consumer, I'm not sure if I've ever went into Target and not left with something. They have I think as an organization they do a really good job of curating high quality products, and always seems to be like kind of a step up from Walmart, but have reasonable prices. And the thing that stands out to me is Target and I'll compare them to like an eBay. eBay's been around for a while, right? It's a legacy e-commerce company. But we're starting to see new players in this market, and that's exciting to me. I think eBay has probably peaked, but the sky's the limit with these new markets. Target, Walmart, that we've discussed on previous episodes. So let's dive into the article. What were some things that stood out to you?
Yeah, absolutely. So the title of it, Target's marketplace is tiny and should be on the back burner unless you get an invite. Because Target, I found out Target's marketplace is invite only. And so that really jumped out at me, and that is, it's very exclusive. So that was, I was like, interesting. And then I found out that they have only 300 sellers. And so that would really make sense on, if you were one of those 300 sellers, you're crushing it.
Absolutely. There are two things that stand out to me about this business model that differs from Amazon. One is from the consumer standpoint. On Amazon, anybody can start an account and, put up a nice photo and start selling. And I think as a consumer, we've all bought junk on Amazon. It showed up, it hasn't, met our expectations. And that's because there's really no vetting process. If you can start an account on Amazon, you can start selling on Amazon. And so I think people go into their Amazon shopping with a little bit of skepticism. And I think consumers that are used to Target having really nice products are going to continue to get this as they join they're calling it Target Plus, this marketplace, because of this vetting process. The other thing that stands out to me, and I'm going to nerd out a little bit on economics, is on Amazon, the free markets are truly in play, where the supply of sellers is unlimited, and here you've got a fixed supply, and that if I'm gonna really nerd out, that would like invert your supply curve, make it very steep. So if you can become one of these vetted sellers, assuming like a fixed demand, there's going to be a lot more upside for you. And so I like this from a seller standpoint, in that probably not going to be as many concerns about like Chinese, black hats coming in and hijacking your listings. And so, the other thing is, if you can get a ticket to the dance, being a Target Plus seller, that is a golden ticket to the dance.
Yeah, absolutely. And one thing I would add to that is one of the stats that jumped out at me was it said they had on Target's website in 2020, they had over 200 million monthly visitors. And it was up 50% in 2020. So it's a pretty sweet ticket to the dance if you get it, right? Like you have, like you mentioned, there was no, you don't have Chinese black hat sellers to compete with. You really have only 299 other sellers. And from what I'm reading here, Target is basically inviting select brands that they know will be non-competitive to other brands, but also offer an augment to their catalog, like better products. Like, what are their customers searching for? And they're going out and grabbing the best brand in the market for that, and they're adding them to their marketplace. And so I think it's a really high level strategy on keeping the user experience really good, and branding, and also, they don't have this massive marketplace of bullshit they have to monitor and clean up, right? It's just a really nice user experience.
Absolutely. And the last thing that I'll mention about like Target's customer avatar is you've heard of like AA, Alcoholics Anonymous, right? There are groups like this for people that are shopaholics. Like that is a legit disorder, habit, whatever you want to call it. But there are people that really have an issue with shopping to where it is detrimental to their family. And I would bet if you went to one of these Shopaholics Anonymous meetings and there was 20 people sitting in a circle, there would be somebody, I would say probably more than one, that would say, "Hi, I'm Pam. I'm a shopaholic," and she'd tell a story about going to Target. I mean, it has kind of like a cult-like following. I mean, people that like Target really like Target, and when you look at 272 sellers, and then you have 200 million visits a month, I think that speaks to Target. People that love Target that were stuck at home during the pandemic that were like, listen, if I can't get my fix going to Target, I'm getting on Target.com.
Yeah, definitely agree that there's a specific, shopper that Target goes after and that attracts them. One last thing I want to mention is, the article that we're referencing here is basically says, Target is augmenting their selection as a strategy, not to transform Target into a better user experience, and not to try to compete with Amazon or just turn into this massive marketplace. And so I really like that strategic approach of just slightly augmenting them to improve that experience. So to kind of wrap this one up, like David mentioned, in the title of the article, this one, leave Target on the back burner, free up your mental space on something else. But if you do get the ticket to the dance.
All right, our next article is titled Walmart Online Sales Are on an Absolute Tear. The first line of this article reads, Walmart Inc.'s online sales grew 79% for its fiscal year 2021, which ended on January 29th. The article goes on to make several notes about how Walmart Online is just crushing it and really growing. What stood out to you, Ken, about this particular article?
Yeah, I like to see this. I think you mentioned it before on another podcast, like poking the beast. And we're starting to see Walmart's gears turning and moving in this direction. A couple things that jumped out at me, and to the listeners, David and I are doing, we're taking some products into Walmart right now. We're doing a case study on it, so we're going to share that in an upcoming episode for the Walmart Plus marketplace. So I'm excited to report on that experience. It says online sales, their marketplace grew 69% in Q4. That's a tremendous amount in Q4, 69%. And what I really like is that Walmart is they're going pretty aggressive, and they're also using all of their assets. Walmart has a ton of stores, physical brick and mortar stores, And one of the stats here, it says Walmart now offers pickup of online orders at roughly 3,750 stores and same-day delivery at 3,000 of their stores. Now, that's something Amazon cannot do, right? So, I really like that. And if you have to order something, hey, I need to get something, but you want to go to the store to buy something else, maybe search for it, or let's say you have to go grocery shopping and you want to get a TV or whatever. I mean, you can get almost anything at Walmart, right? But say you don't want to research the TV at the store, you want to research it and then find out which one you want, just throw it in a cart, and then when you're getting your groceries, you can go pick up the TV, right? I mean, it saves time by doing that and on your own time. So there's a lot of scenarios where you can do that. Same thing with groceries. You could put all your stuff in a basket at home, and then you want to go there and physically look at a TV or whatever, right? So I like that they're leveraging all their stores and all of their different assets. What are some things that jumped out at you, David?
Yeah, absolutely. So one of the lines reads, other researchers found that almost 20% of Walmart Plus's members migrated from Amazon Prime. And that really stands out to me, just in that, Amazon has been this 800-pound gorilla for the longest time, and you're starting to see new entrants into the market. And, you and I had a discussion a while back on expanding and diversifying sales channels. And we looked at a lot of different opportunities. And when we were discussing Walmart, one thing that we decided on is, one, they're making heavy investment into their e-commerce presence. And if you look at Walmart, they're a Fortune 10 company. I mean, they're gigantic. And so say they allocate a couple percent of revenue. We're talking about several $1 billion, right? And you compare that to like a website like Wayfair, and I'm not knocking on Wayfair, but they don't have a $1 trillion market cap or hundreds of billions of dollars in market cap. And so Walmart is huge. And so when they invest, just by their sheer mass, they're able to invest and hire 100x or 1,000x what a company like Wayfair could do. And so, I am very excited to share with our audience how our Walmart venture goes. I would say we're like just dipping our toe into the waters, right? We've got our accounts registered. We've got relationships hooked up with a 3PL. We're on a waiting list for Walmart fulfillment. And so don't yet have a lot to report here on how that's going. But, if I was Amazon and I was seeing companies like Target and Walmart come into this marketplace and kind of mimicking the Prime model, that would make me nervous. And so, if you could take Amazon Prime and isolate it and, turn it into a stock, I would not buy Amazon Prime stock right now. I'd buy Amazon, but just, that Prime model, you're just seeing more and more people flood into the market. And so I'm excited to see what this looks like. And, if you want to hear from someone who has 4 years experience selling on Walmart, check out our episode with Miro Posavec. He's been on Amazon for 4 years and is a wealth of information and really has a lot more to say about Walmart and the seller's experience than we do at this point in time. So we will link to that in our show notes.
Yeah, something else that jumps out at me, and that 20% swing from Amazon Prime customer to Walmart Plus subscriber, that's pretty huge. And one of the other notes that jumped out at me is during one of the investor calls for Walmart Plus, they asked McMillan, what is the subscriber count? They try to kind of pin him down on it, and he wouldn't really answer, but basically said that Walmart is focusing on the customer experience and delivering the best experience possible. They also noted that they're estimating that the Walmart launched with 9 million members, and Prime has an estimated 142 million. So Walmart has a lot of ground to make up, but they're doing it cautiously, but also they're focusing on customer experience, which I think is really important. One of the other stats that kind of goes along with that is They're going to invest $14 billion in 2021 on supply chain, automation, fulfillment services. That's up from $10 billion on the year prior. So, it's a 40% increase. So is it enough? I don't know. But it's more than last year. So they're moving in that direction. Walmart's a very mature company. Like you mentioned, they're a Fortune 10. So they're not going to make these wild moves. They're going to ease into something, right? And so it's nice to see that 40% increase in investment in that, and so they know that, hey, this is moving the needle. Let's put some more money in there and let's move the needle more. So I like the movement, and I like that they're investing in automation and fulfillment centers and really focusing on the customer experience.
I would say the last thing that I think Walmart has a huge advantage on is their logistics. They wrote the book on just-in-time inventory, and have been developing that method for a long time. And I have said on the podcast that I believe that Amazon has the best logistics in the world. But I'll tell you what, if Amazon logistics and Walmart logistics were to get into a brawl, I'm not sure who would come out on top. And so don't sleep on Walmart. That's what I'll say about this. And it is nice. We made the move into Walmart a couple months ago. Boy, is it nice to see an article like this, kind of confirming that, hey, the decision that we made is being backed up by data. It's being backed up by investment from Walmart. We're seeing customers migrate over. All things are pointing to we made a good decision.
Yeah, absolutely. And I like to see competition. It's good for sellers. It's good for market. So I like to see Walmart taking on Amazon and being a challenger, a legitimate challenger there. And the last thing I'll say is, once we're, I'm excited to share our experience when we're a few months deeper, and we have a, we'll share the first 3 months, 6 months process of going into Walmart, what it was like for us, and hopefully add some value.
All right. So the next article that we're going to cover was from Marketplace Pulse, and it is titled "Shopify is 40% as big as Amazon," and the first line goes into detail on this. 2 years ago, they were 25% the size of Amazon. And so, as we can see, Shopify is growing. Ken, what were some of your key takeaways from this article?
Yeah, absolutely. Just seeing some of the progression of Shopify, the numbers. And one of them that stood out at me, and this might not be surprising to some, but Shopify overtook eBay and recently in 2020, and I was like, that's eBay is kind of sliding, but still that's eBay is up there in terms of longevity for a marketplace, right? Some of the stats here, let's see, because the article is comparing Shopify to Amazon, so we'll look at a couple of the stats here, and actually, to go back, Shopify overtook eBay in the second quarter of 2020, so almost a year ago. Okay, so here are some of the stats. Shopify GMV, which is gross market value, is 25% as big as Amazon in 2018. It reached 30% in 2019 and 40% in 2020. So it's steadily gaining on Amazon. So that's huge.
Absolutely. One thing that I think differentiates Shopify from, say, like a Walmart Plus or a Target Plus is they're not a direct competitor of Amazon, right? And for those of you that are unfamiliar with Shopify, I would describe it as a turnkey website designer that is just set up for online commerce. Would you agree with that description?
Yeah, absolutely.
And I can say, so my brand is on Shopify currently, and Ken, I know you're partial to WordPress, but I can tell you from a a user's experience is it's easy. I mean, if you can drag and drop files, you can set up a Shopify store. It's relatively cheap. And so, I think the other thing is it allows you to have a direct-to-consumer model. And so, if I sell a product on Amazon and I sell that same product for the same price on Shopify, typically it is about 40% more profitable. And I'm thinking of one particular product that I sell. It's about 40% more profitable to sell on Shopify, and the reason for that is there's no referral fee. You will have some, unless you're self-fulfilling, you're going to have a pick and pack or some sort of fulfillment fee. But that 15% referral fee, someone's got to pay that. And so if I'm a consumer, and I'm looking at prices, take a $20 product. A portion of that is how much the product actually costs to make. A portion of that is the fulfillment, right? You get free shipping, but guess what? It's not free. You're paying for it just with a higher price. And they're not taking a line item out and showing you shipping. You're paying that referral fee and you're paying the FBA pick and pack fee. And so I actually am able to price my items lower on Shopify and be just as profitable, if not more profitable, than on Amazon, just because there's not all those fees associated with it. It's $30 a month, and for the subscription that I have, and it's easy to use. So it is not shocking to me that Shopify is growing, and I think you're seeing a lot of sellers try to migrate. Once they're established on Amazon, they're trying to migrate and get people onto their own sales channel that they own.
Yeah, totally agree. I'm a huge fan of Shopify. They IPO'd recently, and I added some of their stock to my passive investment portfolio. So I am a huge fan. I think they're just now starting to get a ton of traction, and there's a lot of room left to grow. And like you mentioned, Shopify is a platform for small business owners to sell their products, right? And although you don't own that Shopify store, Shopify can still shut you down. Recently I heard in the news they shut some Donald Trump stores and some other stuff down. So there's still a little bit of risk there, but at the end of the day, you can collect emails. You can, you have way more freedom and control of your store than if you were selling through a channel like Walmart or Amazon, right? So it also, like you mentioned, it's a drag and drop editor, which it empowers almost nearly any small business owner to go in, create a store really quickly, and be able to reach your customers quick. So yeah, I'm a huge fan of Shopify. One other thing that jumped out at me is, this is common, but it says here Amazon is reportedly working on a Shopify competitor under the codename Project Santos. So I don't know what that means, and I don't know why it's Project Santos. But I mean, it's interesting that they're trying to compete with Shopify. What do you think about that, David?
Yeah, absolutely. It's hard for me to think of Amazon getting into, they'd almost be kind of competing with themselves, right? You saw them sort of make this move where you could get brand registered, and then you kind of have like your own website within Amazon for what's that called?
Your storefront?
Yeah, your storefront.
Yeah.
And so they kind of have that, but you can't get away from those referral fees. They follow you everywhere if you're selling on Amazon platform. And so it's that'll be interesting to see what Project Santos looks like. Anyway, the last thing that I'll mention about this is Shopify was started in 2006. I mean, it's a 15-year-old company, which really is it's relatively new to the market, right? And so, I'm expecting great things out of Shopify in the next 15 years, as long as they continue to invest in, the consumer experience and, making it easier and easier for people that are not tech savvy to sell online.
One last point, and this is to wrap up the article here. It's kind of builds on what you said. 5 years ago, Shopify was 10 times smaller than eBay, and then in 2020, it overtook eBay. And if Amazon's marketplace grows 25%, while Shopify's grows 50% for the next 5 years, Shopify will overtake Amazon. Right. So we'll leave it on that note there. All right, the next article we're going to cover, it's probably one of the bigger ones that we're covering today. Jeff Bezos is stepping down. Amazon is changing direction, and what other management changes are happening? David, what are your thoughts?
I'm a fan of Jeff Bezos. He has done tremendous things, and he's an icon in the industry. However, I don't think this is going to negatively impact Amazon as much as say Elon Musk were to leave Tesla, right? He is the face of Tesla, and I'll tell you what, it seems like, just listening and reading some of his books, he's getting in there in terms of like the engineering. And Jeff Bezos to me seems more like the figurehead, right, of Amazon, whereas like Elon Musk he's definitely the figurehead. He's kind of a brand in and of itself, but I don't know. There's just some like trust that I have with Tesla. I'll give you an example. If Elon Musk were to come out with a pair of shoes, I'd buy them because I know they're the best, right? And so anyway, this is definitely will have an impact on Amazon. But when a company gets that big, I find it hard to believe that one person really is steering the ship all that much. It takes teams, it takes a ton of talented people, and certainly someone that can rally the troops and build that team. That's a very valuable skill, but I do not see Amazon crashing and burning with Bezos leaving. What do you think?
Yeah, no, I agree. And to that point, I think Jeff Bezos is, if you've ever read his books or studied anything about him, is, it's like automation and creating a process and then handing that off and then refining it and handing it off. And so it's repeatable, right? You need visionaries, right? And so he's obviously a visionary and a workaholic. And I think that, over the 20 years or however long he's built a great team around him. You have to build an organization like Amazon. No, I mean, kudos to him. I think it's, he's got a lot of other stuff that, that he wants to focus on. Fund, the Bezos Earth Fund, Blue Origin. He wants to get after and mix it up with Elon. The Washington Post. So those are some of the other projects that he's kind of, basically said he wants to spend his time on versus Amazon, and I don't blame him. I'm sure Amazon has been a grind, and for a long time, probably. He also, I know Amazon is getting a lot of pressure from, not only the U.S. government but other governments around the world, or it's like, okay, me personally, I think Amazon's going to be put in check in the next 12 to 24 months, and you're gonna start seeing the growth slow quite a bit, and a lot of pressure put on them, and who knows? I mean, but I'm happy for him that hey, it's like a championship fighter going out on a KO. It's like that dude rocks. Like that guy makes more money. The time it takes him to take a crap, he's made more money than most people make in their life, and it wasn't given to him. He created that. He earned it. He built all this, systems and processes, and I mean, I for one am happy to see him go. His motto. I'm a seller on that marketplace, and his motto is, "Your margin is my opportunity." Well, so all right, no love lost there. See ya. Enjoy those other projects, but yeah, kudos to him.
And based on the last three articles that we've covered, with Shopify increasing market share, with Target increasing market share, with Walmart increasing market share, this is a good time to get out, in my opinion. He is Floyd Mayweather. He's 49-0, and every time Floyd accepts another fight, it's like, don't mess up your perfect record, retire, and you'll be the greatest of all time. But Floyd continues to fight into his 40s, and he always seems to win. But, I do feel like in terms of timing and exit, what a good time to go out on top.
Yeah, absolutely. Starting a bookstore in 1994 and build it to what it is now. I mean, it's pretty incredible to be able to see that opportunity and then just grind it out. One other thing, so a couple more things. Andy Jassy, I've not researched him as much. He's going to replace Jeff Bezos, and he comes from the AWS cloud side. Apparently, he's kind of grown that division, which is that division is, from my research, is the most profitable in the company, right? And one of the other articles I read about him was that he's kind of a ball buster in terms of like if another executive wanted to bring a proposal to him or something, like they said, you need to like refine that proposal 3 or 4 times and make sure it's like spot on, or you're going to get chewed up. And so if that's any indication of who's coming in into the chair at the end of the table, that's probably the direction they're going to be going. The last bit I would like to add is like what you mentioned earlier is, with the leaders stepping down, kind of you don't see any changes happening. Something else that I also was researching, and it's kind of funny. 2 other Jeffs on the executive leadership team are also leaving, and so I'm like, that's a dust up, right? Like you have Jeff Blackburn, who's been at Amazon 22 years. He did a lot of different. He created a lot of different and headed a lot of different divisions in Amazon. He announced his exit like it was pretty immediate, and I think just in the last few days, depending on when this airs. But he also said he's not retiring; he's moving on. So he will announce something very soon. I'm interested to see where he's going and what project he's taken on. The other Jeff that's leaving, or that he's already announced it, Jeff Wilke, who's the CEO of Amazon's worldwide consumer business. He's retiring as well. So 3 Jeffs are leaving Amazon. So it'll be interesting to kind of see what that does and the impact of that. What are your thoughts, David?
Yeah, I think that, as I mentioned a little bit before, when you see these exits, it's kind of a bummer to see, whatever. But I truly don't think that, Amazon has their reputation. They have a ton of consumers. They have a proven business model, and I don't want to sell on Amazon any more or less with the 3 Jeffs exiting. I also don't really care as a consumer. You know what I mean? And so as long as these the new executives that are coming in to replace them can fill their shoes and continue to push this company forward, I see Amazon for the next 50 years being a tremendously successful company, a Fortune 10 company. And so it'll be interesting. But when Steve Jobs, I'll give this example. When Steve Jobs stepped down from Apple, I can just only speak to the consumer side. Things didn't seem to change that much, right? The iPhones continued to get better and better. Customer experience kind of remained constant. And so I think when you have a figurehead of a company, I think their importance as an individual person is probably the most important in the early stages. But as you build a good team around you, you become less and less important.
Absolutely. I couldn't agree more. And, at this stage, all 3 Jeffs at that point, right? They're visionaries. They're like, they're a conductor in an orchestra. They're just kind of pulling strings and they're balling. They're not grinding. They're balling, right? And so one other thing that kind of comes to mind is like a golden parachute. You hear that a lot. Like I would say at this level, this is like a diamond parachute.
Oh yeah, I mean, one of the Jeffs was there, for 22 years. Amazon was started in '94. I mean, his stock option. He's a billionaire.
Yeah.
And so, not a bad exit, not a bad run. A good company to start working for and stick with. And probably when his stock options got to $1 million, boy, would that have been tempting to leave, right, and cash in. Or then they probably got to 10 million and then 50 million, and good for him for sticking it out this long. I would imagine that he believed in the long-term vision of the company, and that's why he stuck around. So, tip of the hat to all 3 Jeffs. I wish them the very best in their next endeavors. And I would imagine Bezos in particular, with the amount of capital that he has, even post-divorce, he should be able to do a lot of great things with that. Humanitarian, and I look at like the Bill and Melinda Gates Foundation, the number of people that they have helped, like Bill Gates or not, the number of people that they've been able to impact and just do good things is great. It's great for humanity. And you take a guy like Bezos who has some of these humanitarian interests. I think it's a net positive for the world.
I absolutely agree. And I couldn't agree more. Like, I would definitely congratulate all three of the Jeffs. Like they all crushed it, put a lot of work in, and as an entrepreneur, it's a lot of work that goes into that. These guys take a lot of crap, and at the end of the day, yeah, congratulations to them. And I agree with you. Like that amount of resources can impact a lot of people, and like I can see Mackenzie, his ex-wife, is really doubling down on humanitarian and giving away her wealth, and I hope that Jeff Bezos does the same and can create a positive impact in the world. So we'll leave it with that. Okay, so the last article we're going to cover, we're going to end on a high note. U.S. e-commerce sales near $800 billion in 2020. Wow, David.
I have been saying, and I fired the man, and I am all in on e-commerce, and so seeing an article like this really reinforces the fact that I feel like I made a good decision. And I would say to our listeners, if you're thinking about getting into e-commerce, boy, is there a huge opportunity here. It's been well documented of me and you saying, if e-commerce as a concept was a stock, I would buy it, or we would buy it. And so it's great to see this growth. And I'll tell you what, I truly feel like it's a better shopping experience. It's just better. And once people go over to e-commerce, and start ordering things, they generally don't go back to brick and mortar. And so, the one thing that stood out in this article to me was that it only represents 16.1% of retail. And that is, if you think of a pie graph, it's a decent sized slice of pie, but it's still a slice. It's not the entire pie or even half of the pie. And so, I see, e-commerce continuing to grow, continuing to expand, and continuing to take over brick and mortar retail, or kind of like a merge of the two. And so, when I read this article, it made me really happy. What about you?
Yeah, same here. And to your point, that 16% piece of the pie, and so that's for the listeners, that's like market penetration, right? So if you have a piece of pie, and the entire pie is all the money spent, well, 16% of it was spent in e-commerce, meaning online. The rest of it was brick and mortar and other channels. So that there's a lot of room for growth, right? 84% of room for growth. So that's a massive amount of growth available. And some of the numbers behind that, e-commerce grew in the U.S. 32% in 2020, and that's up from $600 billion the year before, which was 14% of total retail, and in 2019, 11.3% of total retail. So you're seeing staggering numbers of growth. And then the average is 15% year over year growth for 2020. So I mean that's a significant growth. And like you said, like I think as people, once you create a habit, it's really hard to break. And if that habit is online shopping, well, you're going to continue to do that, right? Unless you train yourself to break that habit, which I don't think many people are going to do. Why would you train yourself to do something that's not as efficient or that you don't like, right? I think as e-commerce becomes, better, the user experience is better, you can get what you want quicker, faster, better, it's not going to change, right? So we might see a little bit of level off. Post-COVID, I think probably a little level off, but that growth is going to continue for years to come.
All right. Well, thanks everyone for tuning into the Firing Man podcast, and we'll see you next week.